Something irreversible just happened in the global silver market, and almost nobody understands the scale of it yet. For the first time in modern financial history, China and Russia have quietly coordinated a silver strategy that is breaking the Western paper pricing system in real time. Not next decade, not in a few years. Right now, as you're watching this. And by the end of this video, you'll understand exactly why the silver game that controlled the world for 50 years is ending. Why the price spikes in the next stage won't be gradual but explosive, and what this means for your money, your savings, and the global economy. So listen carefully, because once you see the pattern, you cannot unsee it. Let's start with the clue nobody noticed. In the last quarter, China and Russia together imported more physical silver than any year in the last half century. China alone pulled in well over 100 million ounces in under 90 days. Russia, under sanctions and supposedly cut out of global markets, quietly redirected mining output into state stockpiles at levels not seen since the Soviet era. But here's the part the mainstream financial world missed. None of this supply touched COMEX. None of it went into LBMA vaults. The two biggest geopolitical rivals of the United States are bypassing Western markets entirely and building an off-exchange monetary system backed by real metal. That's the moment the silver market broke. Because for decades, silver price discovery didn't come from physical metal, it came from paper. Futures, options, leveraged contracts, synthetic derivatives. For every ounce of real silver, there were 50, sometimes 100 paper claims. The Western system didn't need real silver, it needed faith. Faith that physical would always be there. Faith that if someone wanted delivery, the vaults could provide it. Faith that the system itself could withstand stress. China and Russia just called that bluff. And when the world's largest emerging economies stop playing the paper game and start removing physical from global circulation, the entire illusion of unlimited supply collapses. You can already see the cracks forming. COMEX registered inventories have dropped to multi-decade lows. Industrial users are quietly signing long-term contracts because they can't afford supply disruptions. Solar manufacturers in Asia have started panic shopping for silver paste. And the LBMA, the world's largest hub for physical silver, recently reported the sharpest multi-month decline in deliverable metal since records began. This isn't normal market movement. It's a structural break. To understand why China and Russia are doing this, you need to understand the strategy behind the strategy. For China, silver is not just a commodity, it's a strategic resource. Solar power, electric vehicles, medical manufacturing, AI hardware, 5G infrastructure, all of them require silver. China leads every one of those industries. If silver supply tightens, China's economic machine slows. That's why they're stacking silver now, before the shortage becomes official. For Russia, the motivation is monetary. Since the beginning of sanctions, Russia has been cut off from dollar settlement systems. They've experimented with gold-backed trade instruments, bilateral currency swaps, and barter agreements. Now they're expanding into silver, a metal historically used as currency for thousands of years. When two major powers with aligned geopolitical interests start hoarding silver simultaneously, it's not speculation, it's preparation. But here's the twist. The West can't stop them. And the reason is simple. The West doesn't have the silver. Most people don't realize this, but the US government no longer holds strategic silver reserves. They sold nearly all of it decades ago. Europe isn't better off. COMEX inventories are shrinking. Most silver mines are in decline, and global demand is rising at the fastest rate in history. Between solar, electronics, batteries, military systems, and investment, the world is consuming silver faster than it can be mined, faster than it can be recycled, and faster than anyone expected. Now add China and Russia draining the remaining physical supply, quietly, aggressively, relentlessly. This is why Western analysts are suddenly confused. In the last few weeks, silver prices behaved in ways that traditional models cannot explain. Physical premiums surged while paper prices lagged. Backwardation appeared, a sign of real stress in the market. And the spread between futures and spot diverged, something that happens only when traders begin to doubt the availability of real metal. This is the first stage of a physical squeeze. To see where this leads, we need to revisit what happened in the palladium market in the early 2000s. Russia controlled nearly half the global supply. For years, they allowed Western markets to pretend the paper market reflected reality. The same blueprint is repeating now, but with silver. And silver is far more essential to the global economy than palladium ever was. There's another clue hidden in plain sight. China isn't just importing silver. They re-expanding solar production capacity to levels that require more silver than the entire global mining industry currently produces. Not will produce, currently produces. Their internal demand exceeds the world's supply. And that means China's only option is to acquire silver from everywhere else, quietly draining the global pool. Meanwhile, Russia is redirecting mining output into sovereign stockpiles, meaning much of their silver is gone from Western markets permanently. These two forces combined are enough to collapse the illusion of abundant silver supply. Now here comes the part most people aren't ready for. When physical supply becomes scarce, price doesn't rise slowly, it breaks. The entire paper-based pricing system depends on traders believing that physical delivery will always be possible. When enough traders question that assumption, the paper market implodes. Futures decouple from physical, premiums explode, wholesalers run out, governments intervene. The public wakes up too late. This is exactly what Stage 4 looks like. Stage 1 was complacency, decades of cheap silver. Stage 2 was rising industrial demand, solar, EVs, electronics. Stage 3 was recognition of structural deficit, shrinking inventories. Stage 4 is panic, when paper dies and physical becomes priceless. China and Russia just accelerated Stage 4. But here's what's coming next. Western industrial users will realize they cannot compete with sovereign buyers who don't but care about price. Defense contractors will panic first, semiconductor manufacturers next, solar companies last. Once these industries sense the squeeze, they'll start securing physical supply through long-term contracts, locking out smaller players. We'll start seeing headlines about companies delaying production due to silver procurement issues. Governments will begin issuing strategic directives. Precious metal dealers will extend delivery windows. Investment demand will surge. Retail shortages will appear. And then the final trigger happens. Someone, a corporation, a government, or a large industrial buyer, publicly announces they cannot source enough silver. That single event will ignite the chain reaction. Paper markets will collapse. Prices will gap up, not gradually climb. Silver could jump $10, $20, even $30 in a single trading day. It's happened before. It will happen again. And this time, the pressures are global. People often ask, why silver? Why not gold? The answer is simple. Gold is wealth. Silver is survival. Gold sits in vaults. Silver powers the world. And in a world shifting away from the dollar, away from Western control, and away from centralized financial systems, a metal that is both industrially essential and historically monetary becomes a weapon. China understands this. Russia understands this. Most Western governments still don't. So what happens now? The short answer, the West faces a supply crisis unlike anything in modern history. Mining cannot increase fast enough. Recycling is too limited. Demand is too high. Strategic stockpiles are too low. For decades, the Western financial system relied on paper games to keep silver prices suppressed. That game is ending. When the world's emerging powers refuse to play by the old rules collapse. The bigger truth is this. China and Russia didn't just break the silver market. They broke the Western illusion of control, and the world is about to feel the consequences. If you take one thing from this video, let it be this. Silver shortages don't warn you. They arrive silently, then violently. By the time headlines catch up, the market is already gone. The people who understand what's coming prepare early. The people who don't get left behind. And what comes next will reshape the global monetary system, the global energy transition, and possibly the global balance of power.